greatest danger to anyone's investing portfolio. If you're not keeping up with inflation, you're hosed. But we're going to a global recession. It's all going to end. We should just quit. End of seminar. Of course not. To set up where I think we're at in the market, I do want to do a little history lesson. In 2020, here was everybody's biggest complaint. At the time, we managed 400 houses. Now we manage 700. There was an eviction moratorium, so no one was paying their rent. So of our 400 houses, we had 80 of those tenants weren't paying their rent. So that was a quarter of our inventory not paying rent. So everybody in the room was like, this doesn't work, the tenants will never pay their rent. And we were like, money is free right now. There's zero interest rates. You buy and it doesn't matter if your tenant pays. And then that's what we recommended, and it worked out pretty well. Yeah, you know, it was just like, money is free. You have to get as much of it as you can. I remember, Scott Lang, you ran the numbers. It was like something like you could have with how low the interest rate was, you could have a tenant not pay for 7 years and still be fine. So that was our recommendation coming out of 2020. People showed up nervous and anxious. Every time people show up to Cash Flow Heaven, nervous and anxious about the market. There was a $10 trillion economic stimulus, and for a year at that point, we'd been saying the printing press is hot. Get as many of these loans as you possibly can. But everybody's complaint was like, there's no deals out there. We can't do this. 2020, the objection was, we can't do this. It's not real. 2021 was, this is real, but we can't do this because we can't find any inventory and it's too hard. This was like basically everybody in the room. So prices are rising, couldn't find inventory, and then all the turnkey providers had huge waiting lists. So we came up with a solution. We showed people the Burr method. It was the first year we coined the Robert Allen method. We showed people how to do semi-active deals, which we're going to show you again to do today. We reminded them the 4 pillars are always there. Doesn't matter. When you win in 4 ways, doesn't matter what the market's doing. You will win in one of those ways. And we just kept saying, get a hold of the financing, and money is still for sale. Get a hold of the financing. Even though we've been selling turnkeys at 6 and 7% interest rates, there was amnesia. It's like, if we can't buy a turnkey at 3%, it's not worth doing. I started the weekend off with, you're right, we should all just quit. It's over. I can't decide if the pessimism was higher in 2021 or 2022. But the big complaint was, we can't do this anymore. There's no cash flow in year 1. The interest rates are too high. Cash flow isn't why you buy these. Cash flow is the permission slip. That you don't buy long-term assets based on its year 1 performance. Because a higher interest rate just means year 1 performance may suck. And guess what? Low interest rates, high interest rates, when you buy a 30-year asset, the first year will always suck. It's like 9-year-old baseball. I have a 9-year-old right now. He's playing kid pitch baseball. It's like watching paint dry. I push my hair down over my ears because I have ear pods in, because I'm listening to an audiobook or a podcast because it's so boring. But I'm like, yay, Tommy, you can do it. Way to walk to first, and then steal second, and steal third, and then steal home when the catcher drops the ball. But why do we muscle through 9-year-old baseball? Because 11-year-old baseball is getting kind of cool. It actually looks somewhat like baseball. So that's the other thing. The first year in these long-term assets, it's 9-year-old baseball. If it's more exciting than you and a better experience than 9-year-old baseball, you won. But you will not feel rich in the first year. This is a long-term asset, and we've kind of showed that on paper. We showed that cash flow was just a permission slip to access the other 4 pillars. It's the North Star in your game plan, and eventually it's going to be your exit 10 years from now, not 2 months from now. One of my favorite turnkey experiences when we first started is in 80 days, the buyer calls me up and he's like, hey, Jimmy, my portfolio is not true. My pro forma is not true. This is 60 days and I'm not seeing the cash flow yet. I was just like, bro, this isn't trading stocks. Like, if you want instant cash from this, you go flip or wholesale. And we're gonna talk about that too. And so then Brad did a major upgrade to the pro forma, showing that these are long-term assets and showing the adjusted returns, inflation-adjusted returns for 10 years. And so, because we used to always focus on year 1, which was dumb. It was the dumbest mistake I've ever made selling anything. This used to be the old pro forma, the obsession with year 1, and then we're like, hey, you need to start looking at this as 10-year assets. And so then we said, hey, buyers may leave the market. There's gonna be more deal flow. So the 2021 complaint is over. There's actual deal flow. You're gonna benefit from the price leveling. You're gonna benefit from rent catching up in prices. The other thing that was hard to get deals is rents had not caught up with the prices. So they were skyrocketing prices, but you couldn't get any cash from it because the rents hadn't caught up. And then we also said something somewhat controversial. We're like, the interest rate's still lower than the rate of inflation, so money's still for sale. So 2020, 2021, 2022, money's still for sale. Keep buying. So here's what I think is happening, and what I'm seeing on the street is the market is stabilizing. I didn't enjoy 2021. When prices were skyrocketing, it sucked. Couldn't find any deals to turnkey. I couldn't find any deals to flip. It was miserable. And every time I hit the buy button, I was just like, this will be the one I get slaughtered on. And then once interest rates hit, I got slaughtered on 4 houses. I lost 50 grand on one. I lost 30 grand on another. But I hated that feeling of every time I bought, I could get slaughtered. I much prefer a more predictable, stable market. Like even if real estate's not the golden child anymore. So I much prefer stability. And we've been beating this drum for 6 months now. Inflation's a real thing. It is happening. Inflation is still rising. Rents are still rising. I think we have like 8 houses on the market. We can't keep houses for lease on the market. So rents are rising, and then prices have stabilized over the last 6 to 9 months, which I have found particularly awesome and particularly fun. Who here has seen She's All That, a 1990s rom-com classic? Raise your hand, all you guys. I know you saw it on dates. Bunch of liars in this room. Just to give you the plot synopsis of She's All That, like Freddie Prinze Jr. was like the high school quarterback, like the prom king and everything, and then there was the painter girl who was like the nerd, but she had a really good heart and a really good person, but she was always wearing a smock and she was kind of a nerd, and so she didn't get any attention. All the cool kids made fun of her. It turns out she was a nice person and really beautiful on the inside and the outside. And so it just took a while for Freddie Prinze to recognize that. Freddie Prinze had to invest in crypto. Freddie Prinze had to play the stock market. Boring, old, single family, 1,000 square foot houses is She's All That.